All right. Hello, hello, hello. Good evening, everyone. My name is Davon Reese, founder, CEO of Investor, which is a crowdfunding platform for commercial real estate, including hotels, as well as founder and president of the Vaughn Group, which is a consulting firm and ownership group. And decided to put this panel together. So actually talking to Rebecca. So proud of her for being one of the first Black women hotel brokers. And I said, okay, we got to put a panel together of hotel brokers, a Black hotel broker. So we got this discussion on navigating the hotel market with insights from hotel brokers. So we just going to start it off by letting the brokers introduce themselves. And then we're going to have some questions. It's a real intimate group of us. So we're able to ask questions because before you become a hotel owner, guess what? You actually have to find the hotel. So, and I always recommend to work with a hotel broker. So my esteemed panelists, just introduce yourself, tell everybody your story, where you're located. Because we don't know who's on the call and they may want to buy a hotel or commercial real estate and they may be in your state. So I'm going to start it off with ladies first. So I'm going to start it off with Rebecca. If you could just introduce yourselves, let everybody know where you're from. And I know you just started off as a broker, but you are hitting the ground running because you already got some deals under contract.
Yes, yes. Thank you so much. I really appreciate the opportunity, Davon. Thank you for putting this together. Thank you to Omari and to Chris. I appreciate you guys as well. I am located in Washington, D.C. However, I'm from New Orleans, Louisiana. I can never say I'm from D.C., although I've been here for over 20 years. I am new to hotel brokerage. I'm with New Gen Advisory. They are headquartered in Phoenix, but we sell hotels nationwide. So no matter where you're looking, I can assist you. I come from a residential sales and a medical sales background. So sales through and through. And I look forward to talking to you all, answering your questions and helping however I can.
All right. Thank you so much, Rebecca. Okay, we're going to pass this over to, since she mentioned New Orleans. So let's go ahead and keep it in New Orleans. Let's go ahead and pass the baton to Mr. Chris Ross.
Hello, thank you, and nice to meet you, Miss Rebecca. I'm surprised I've never met you before, but I'm pretty sure we're gonna do a deal at some point. And my great friend Omari, just good people, man. It's a great friend of mine. We come through the pandemic together. And Devon, we met at Nabhood. That may have been 6 or 7 years ago. So again, thank you for everybody for giving me the opportunity to speak to you. Chris Ross, again, based here in New Orleans, worked for NAI Ladder and Bloom. And it's crazy. Today is my 25th year at Ladder and Bloom today. So I know I don't look that old. Again, I didn't put the Beijing in, but we still trying to do it up. So we've been in hotel brokers again, general broker at Ladder and Bloom that amount of time, but I probably did hotel for the past 7 to 8 years. Done a lot of development work as far as hotel in existing hotel as well. Look forward to a good conversation today with this esteemed panel, and look forward to learning from you too. Thanks a lot.
All right. Thank you, Chris. All right, we're going to go ahead and pass it over to Mr. Omari Head.
Good evening, everybody. Thank you again, Davon, for the platform and also curating this with some other very esteemed individuals. Rebecca, always good to see you, sis. Chris, you know what it is. You've been doing hotels for longer than 7 years. You're being modest. Chris is that definitely is not new to this. He's true to this, and never been stingy with the game. Always been a good advocate and an ally out here. So my name is Omari. I'm also seated in the DC area. I head up the office for Paramount Lodging Advisors. So with Paramount Lodging Advisors, we transact across country. And what that looks like is as long as it's a hotel or zoned as hotel use, I'm able to transact on it. I am a hotel nerd. That's all I've ever done. My background is hotel operations. And then prior to that, and I still teach hospitality at the undergraduate and graduate level. And just staying engaged. It's been a pretty busy 2023, 35 closings this year to date. Got a few more in the pipeline. Got some stuff. Looks like we should be having a strong Q1 opening up here, but total across the career over 200 hotels transacted. So love to be in these spaces. Love to see these faces.
I love it. I love it. I love it. So we're going ahead and start off, make it informal. I just figured it's just us. We family today. So whoever want to answer, just answer it. We're just gonna make this real simple because all of y'all have so much value to bring, and you bring different perspectives. Especially with Rebecca, by you just starting off, and in the commercial side, right, or the hotel side, and Chris, you do both hotels and other commercial real estate asset classes, so you bring a different perspective. And then Omari, you're just hotels. So as far as discussing the current trends in the hotel market, and Omari, you speak to this a lot with your weekly lives on Instagram and on YouTube. What do you see as some of the current trends in the hotel market?
I think the biggest one right now is in terms of, I'll speak from both lens. One, which is the traveler lens. So they're still calling it revenge travel, which I thought was really interesting. I thought that would be more of a temporary thing. And how I look at it is when you talk in terms of physics, you got potential energy, which is stored up, and you got kinetic when it becomes activated. So, I'm like, well, how long is this kinetic, right? Because the pandemic is, classified as over. But they're still saying that people are still out here traveling because they felt pent up for that long, and there's that much pent up demand. We're still projected to increase. So travel, however, travel's starting to look different. We're starting to see some things normalize in the industry. And then I'll speak from what our owners and operators are saying is that it's the business is coming back, but it's always market specific. In some markets, that group demand hasn't come back. In other markets, COVID was the best thing that ever happened to them, and some of those drive to leisures. Now, some of those are correcting. So the trends are looking different depending on what segment and on through what lens you're looking at it from.
Now, Chris, I would love to hear your perspective. Are you seeing the two things? One, are you seeing the same trends that Amari just mentioned? And then can you, because I know we have some folks who are they're coming from another side as far as not doing the hotel side, but you see any current trends? Because I know you do other things besides the hotel space as far as current commercial real estate trends.
Yeah. I mean, definitely. I echo Amari and think that for a market like New Orleans and this region is mainly off of the leisure market, right, and which drives this market. On the group side, I think we're definitely seeing an uptick in that since COVID, right? But it is not dealing where it was before COVID. And on the corporate side, New Orleans, I think we do well with that, but I don't know if we again necessarily where we were before COVID, right? And but New Orleans, again, we've persevered through a lot. I think we're getting stronger. We're adding a lot of things to the market as far as the River District and different amenities that we're trying to make stronger, because remember, we have the 25 Super Bowl coming up. So you have a lot of stuff that's going on in New Orleans that's prepping us for that. So I do agree with Amari. You're seeing a bit of a correction, but us in New Orleans, I think we're doing well as far as the leisure market is concerned.
Oh, you know what? Look, I didn't even know that you just brought some news to me. I didn't even know the Super Bowl was coming to New Orleans in 2025.
Well, yeah, when the votings come out, make sure you vote for Lil Wayne and Juvenile to do the halftime show. See?
Yo, that'll be so dope. Oh, I'm here for it. I'm here for that. Okay. Now I'm gonna bring this to you, Rebecca. So can you share some observations on what buyers are currently looking for in hotel properties?
A lot of the buyers that I'm working with right now are looking for extended stay, and it's pretty difficult to find. A lot of the bigger companies have bought up some of those. So
Yeah.
I'm finding a lot of buyers still looking for extended stay and looking for conversion opportunities because of the key money and that sort of thing they can get from some of the brands that have these programs for underrepresented minorities. So I would say those are the two things mainly that I'm seeing.
What about you, Omar? Are you seeing the same thing?
I'm seeing it's a few things. It depends on how sophisticated the buyer is. So Rebecca hit the nail on the head. We were all reading the same headlines for the last 36 months talking about the resiliency of extended stay and the economy sector. You're starting to see some correction there, and that's starting to normalize a little bit. But I'm also seeing folks that are starting to get a little bit more comfortable with development, and they're trying to find land. I don't recommend that for your first deal or three, unless you have a lot of stars aligning, and that's a whole nother conversation.
Yeah.
And then the final thing that I'm seeing in terms of folks, they're looking for types of financing that are applicable to the property. Because right now, you hear a lot of people complain about interest rates. So still applicable in the hotel space. So for instance, I have something listed right now that's eligible for a USDA loan. Well, if you're maxed out on your SBA proceeds, you can still use a USDA loan. So that might be attractive to some folks. And it works very similar to SBA. Whole another conversation I'll put y'all to sleep with at another time. But you know, the financing is key to it. So some people are looking at what can I get that fits these financing criteria.
What about you, Chris? When you work with hotel buyers, what are they looking for?
Well, they're looking for a number of things. I want to say this because I know this is a.
Oh, we lost you.
Wait, we lost you. It went
Sorry
mute.
about that. Can you hear me now?
No,
I'm
okay.
back.
Yeah. Just repeat what you
Sorry.
just said.
Sorry
Yeah.
about that. That, you know, I would say that to the group that if you're working with someone like Rebecca and Omari and myself, you know, never call us and say, send me a list. I'm telling you right now. If you call a
That's
hotel
game
broker,
right there.
if you call a hotel broker who does this and you ask me for a list, I'm telling you right now, I'm gonna shut down because that means that you don't know this business, right? That's the first thing. Second thing is what I find is people are looking for deals, right? The interest market is what it is here in South Louisiana, Louisiana overall. Insurance is an issue. So people know that. And with high insurance and high interest rates, there's an inversion because now valuation comes down. And so people who have the capital or access to capital to acquire a hotel are looking for deals. That's what I find in this market.
Okay. So
That's
let's
spot
talk.
on.
Well, you want to add?
I just want to say that's spot on. Like you said, the first thing is knowing how to make sure that you're positioning yourself in a position of strength when you get on the phone with the brokers, because we want to help, but you have to be able to articulate what it is that you need. Like you can't call Rebecca and say you want a hotel, because I'm sure she will ask you, you know, well, what price point are you looking to be at? And if you say it doesn't matter, hey, we already.
Oh, that's a wrap right there. That's a wrap for me.
We
I don't
kind of
even
know
sell
what
hotels.
time it is. Yeah. So
It's imperative to know your deal thesis. Where do you want to be? What's your price point? That sort of thing. If you tell me anywhere in America, any price point, like send you $3 million deals and $27 million deals in Florida and North Dakota, like
That just sounds like to me you don't have any money. If somebody say that, I'm like, you know what? That's equivalent to you don't have any money, or you think you know people with money, and you think they're gonna give it to you, and when the time comes, they're gonna give it to you. That's what that sounds like to me when people talk
Right,
like that.
right. And brokers, you know, our most important commodity is our time, right? And so, and we're at risk here. I mean, I don't think people realize that when we open up a dialogue with you as a potential buyer of a hotel, we are investing in you at that point. From that conversation, I'm investing my 25 years of experience in what you're talking about. And if I send you a list or send you a piece of property or call on an owner on your behalf, I'm going to see that person again. May not see you. So you have to value that, right? That when I talk to you and engage you and you engage me, I'm at risk now. And that's going to be very important. So I think just being very cognizant of that in talking to new buyers or people looking for hotels are very important. It's very important.
So, okay. So let's talk about the process of finding a suitable hotel. And we talked about this a little bit with the deal thesis. And Omar, you talked about that a lot, ownership thesis or investment criteria. So what are the key steps a buyer should take when working with the hotel broker? I know you just mentioned, Chris, don't bring up a list, which is, I'm glad you said that. But what are some of the key steps a buyer should take when they're working with the hotel broker? I don't know. Chris looked like you was.
No.
Oh, okay, Omar. That's you. You was smiling. Looked like you was ready. You talk about that a lot.
Yeah, the first step is being able to articulate what it is that you want within reason and know your points of flexibility. So that's what your investment thesis should look like, right? If you are 100% shut down to exterior corridor properties, meaning where the door opens up to the outside, we used to call them motels, but you only have a $3 million budget. There could be some disconnect. I saw Rebecca. there could be some disconnect there. You know, can we find you something? It's possible. Is it probable? Maybe not. That's number one. Number two is understanding how this works. We're going to get very quick. And out of my seasoning and the time that I spent in the game, and learned a lot by, you know, getting coached up by some sharp folks like Chris, is, you know, we get to the point where we ask you not only what's your budget, but proof of funds. So all of this, you know, I was hoping to just get it under contract and show proof of funds later or whatever else. A lot of times we're dealing with sellers. Some of these sellers can be, you know, not as sophisticated, but a lot of owners of hotels, it could be a publicly traded company. It could be a real estate investment trust. It could be a private equity fund. So I can't call this Fortune 100 blue chip company and be like, yeah, I got a buyer. Yeah, he or she doesn't want to show proof of funds. Like that's a normal in our industry, and don't be offended by that. The other thing that I would do is, and the final thing is, I would recommend you all to go online and find the PFS statement from the SBA, the personal financial statement. Fill that out so you have a snapshot of what your own, and you and your partners, of what your own financial health looks like. Because once you get us engaged, we would like to assume that you're fully capitalized. And if you're not fully capitalized, there's vehicles for that. You can use Vestor to put together the rest of your equity, but we still need you to get under contract and have enough equity to show, to get a seller comfortable with that. And what they're going to be looking for is evidence. Thank you, Davon, for dropping that in chat. They're going to be looking for evidence of liquidity and your ability to perform. And the thing that you already have working against you is that you don't have a resume in this space. And we can conquer that, but you just got to keep us in the light in terms of what's going on. We're not the people to flex with. You know, you can tell Rebecca, myself, Chris, you can tell us, hey, I'm not strong here. I'm messed up here. Like, you know, this not going to make sense, but this is my solution for it. And we can kind of talk through it. But like Chris said, we got to see these sellers again. It's a small industry, and we've built our reputation and how we eat out here. And we've got to make sure we're presenting qualified folks. You're on mute.
Rebecca, sorry, what about you? What do you feel as though would be some of the key steps outside of what Omari was saying for somebody to work with you as a hotel broker?
I think that was pretty comprehensive. He hit the nail on the head. Know your deal criteria, or your deal thesis, and know where this money is coming from. You have to have some money. You can't just go all on what you think your friends have that's going to invest in your deals. And I think that personal financial statement is a great place to start. So we will be, I think you put it in the chat, right, Davon?
Yeah, I just put it in the chat. Yeah,
So
I put the link that Omari was talking about in the chat to put together your personal financial statement or your personal balance sheet. And basically what that is taking the difference between your assets and your liabilities to see your net worth. So your assets can be the equity of your home. It can be the cash, the funds in your retirement or 401k or mutual funds or cash buying your life insurance. Liabilities would be, your debt on your mortgage on your house, your credit card bills, student loans, all of that is considered debt or liability. So you take the difference of that, and that'll be your personal financial statement. If it's negative, may not be the right time to buy a hotel, maybe it's the best time. And you know what? I'm not down in your dream, but maybe it's talking to a financial advisor or something like that, or working on building your personal financial statement. So as far as now, how important is it for a buyer to understand the local market when looking for a hotel? Chris, I'm gonna pass this over to you because I know you specifically deal with the New Orleans area.
Can I go back to just one more thing?
Absolutely.
What I think is important, right? have at least a macro a level understanding of the business, right? I mean, you know, we all want to do certain things, but you got to know what it is, you know. Don't have gone and looked at some Grant Cardone video and now you want to, you know, own a Marriott, right? You know, so understand what the business is, understand the differences between leisure, corporate, and group, understand the differences in limited service, economy, full service hotels, understand the differences in nuance and brand and what that is, right? The difference between Hyatt, Hilton, IHG, whatever. Because there's a lot of, again, nuance in the business, right? So have a fundamental understanding of that. Understand that, you know, most hotels are brands are asset light. And so, you know, what do you bring to the table? What's your team, right? So if you're going to be an owner, you know, who is the management company that you're thinking about using? Who is the construction company that's going to go through the PIP with you? Who's going to, you know, like Devon is going to help you on the financing. Put all of that stuff together first, I think, before you get out of here. I think, you know, all of us want to go somewhere, but we, you know, most of us don't want to sit down and take the time and put the map together on how we're going to get there. Yeah, so I think that's very important, is to put together that infrastructure before you know, working with somebody like Omari and Rebecca and myself. That's the first part. Second part is in New Orleans market. You know, I think I'm straying off a little bit, Devon. Give me your question one more time, because I want to make sure I answered it properly.
Oh, no. Oh, let me pull it up. So it said the question is, how important is it for a buyer to understand the local market when looking for a hotel?
Okay, great. I think all real estate is local. All real estate is local, right? And you have to understand that the local markets in which you're in, because they all affect differently. And Omari knows this. He was looking at a property in the New Orleans, east part of New Orleans, and it doesn't look like it's far. Chalmette, actually. It doesn't look like it's far from downtown. And I'm like, yo, that's a different area, man. You know, then it may not look different on a map from, as far as distance is concerned, from downtown, but it's a lot different than what you know, I think you think it is. So understanding the different nuances with the market, with the different markets that you're in, is going to be very important. And any professional that are in these areas, that's one of the things that you're engaging in leaning on them to, is to help you understand the local market and what do those different nuances mean.
You're on mute.
Sorry, I keep taking it off. Omari, what about you? And how important is it for a buyer to understand the local market when looking for a hotel?
I think before you even can try to understand the local market, you want to make sure that you have a clear understanding of your deal thesis, and that'll help you understand what the key points are that you need to understand about that market, and that you need to focus on, because understanding the market is very broad and it's difficult to have to tool up on markets really quick. That is a gift that I have. You know, I've transacted everywhere from Albuquerque, New Mexico to Albany, New York. So like I'm able to tool up on markets real quick. But if you don't move like that, then you might just want to say, hey, I'm focused on these demand generators: hospitals, universities, right? And airports, right? You may say it's those three things, and you know the specific questions to get you comfortable with that. And that can get you 80, and that might be able to get you 70 or 80% of your comfort level, and then everything else can kind of fall in line. But a big piece of that is that you just have to understand what those things are, and that you're looking for, that's going to attract guests to your property. And the reason I say that is because sometimes people get too caught up on, I want to own something within 200 miles or within 100 miles of my house. And it's like, well, you know, Rebecca and I live in DC, and DC is a very diverse and heavily Black leaning city. So if it's all these high net worth Black folks here and we start talking about 100 miles within DC, it's still pretty expensive, right? It's like, so you might have to open it up. You might find yourself in a secondary, tertiary market 250, 300 miles away, and you may scratch your head and say, well, I never heard of this city, but the economics can be there, and you got to be able to get through that and digest that information real quick. And that's where also you should be able to lean on your advisors. And Chris said something crucial about building that team, and you got to build the team, and sometimes it's consultants. You may not have a partner that understands this industry, and that's okay, but you got to hire a consultant, and be ready to pay these folks to make sure that it makes sense to pay a couple of thousand to make sure that you don't waste a few million.
Absolutely. I think what folks need to realize is people are not going to go to a city just for your hotel. They're going to go to that city for another reason. So if you see a hotel listed in, let's say, Fargo, North Dakota, the price is great, it's the brand you want, it's all of that. It would be, it's imperative to know, why do people even go there? Why will folks go to that market? And what type of folks go to that market? Do they go there for business, for leisure, for whatever? So I think it's important to know why folks travel to a location that you're looking at a hotel in when you're considering an asset to acquire.
Thank you for that. So it says, what is the broker percentage rate? We got a question from the audience.
25%. I mean, well, I don't know. I'm gonna say, I'm assuming that this, but I was actually just about to ask a follow-up. I'm assuming that they mean commission rate. And if that's the question, it depends on the asset, it depends on the client. And I don't want to speak out of turn for Rebecca or Chris, but it depends on the asset, depends on the client, depends on the price point, how many hotels we talking, what type of engagement are we talking about. All of those things impact what it looks like on a percentage for certain people. And for certain assignments, it may be commission rate. Yeah. So it depends. I'll tell you that a big piece of it is making sure that you have an understanding of how all of the brokers get paid, because that can also impact your deal as well.
It also depends on the seller, I would say. There's many factors there. What I do is first look at new gen advisory listings, because I know that that's already worked out. And so for a buyer client of mine, they typically won't have to worry about the commission because we already have that worked out. If we don't have a listing at new gen that fits your criteria, then I look at brokerages that have listings that I know co-broke. Not all brokerages co-broke with outside brokerages. And if I find something where it's with a broker that doesn't co-broke, meaning they won't pay the buyer's agent's commission, I'll let you know that, and then we'll have a conversation about what the commission is. So it's not like a set commission rate, so to speak. There's many factors. Chris?
Yeah, I'll just echo what Rebecca and Omari just said. It varies between deal to deal. If you're doing the larger institutional deals, it may be 1-2%, and that may be for the selling agent. And then as the buying agent, you have to work it out with the buyer, how you're going to get compensated on commission. So it really varies in the different deals that you're looking at. So I think that's the answer.
Bye-bye. Okay. Oh, I don't know if y'all heard my little.
I thought he was coming in to substitute moderate.
Hey, he was trying. He really was. So I will say, do you have any advice for potential investors when negotiating with sellers?
The first thing I would say is have an understanding of who the seller is, and that will set the negotiation kind of cadence. What I mean by that is there's certain sellers out here that when they give you the PSA, the purchase sale agreement, they expect minimal amendments because they are a very, very big seller and they own multiple hotels and they just do not have time for it. Some sellers, they're looking for X amount of money, non-refundable. And if you don't have that, feel free to submit your offer. It's not even going to get considered without some non-refundable money. Understand what the seller is looking for, because a lot of times it's not just price. Rebecca and Chris, I'm sure can chime in and tell you that a lot of times it's not always the highest number. It could be because people want to close. That's the end game here. So people usually choose a surety of close, and I'll hand it over to Rebecca to see if she had anything else to add there.
Yeah, thank you, Omari. I think it's important to know why the seller is selling. What's the story there? Are they selling because they have a loan that's maturing and they don't want to have to go through the whole refinancing process? Or are they selling because they have a huge PIP coming up and they don't want to have to deal with that? Because if there's a huge PIP, a property improvement plan, a renovation that's due, if they sell before, it's going to be on you as a buyer to do that. So I think trying to understand why the seller is selling will help you with your negotiations. And I tell my clients that it has to be a win-win. Nobody's just going to give their hotel away. So we don't want to disrespect them with a really low ball offer. Sometimes if you underwrite a hotel and the numbers, it's just not penciling, it might be better to look for another opportunity than to offer them millions of dollars less than what they're asking. So I think there's a couple of things there when it comes to negotiating. Chris?
Yeah, I think that I was multitasking, and so I'm trying to come back. We got these lots. Just,
The
Oh, let me
question,
repeat the question. No problem. I repeat the question. It says, do you have any
I
advice?
apologize. I apologize.
It says, do you have any advice for potential investors when negotiating? You probably working on a deal. I mean, we get it.
I was actually.
I know. Yeah. It says, do you have any advice for potential investors when negotiating with sellers? That was the question.
Yeah. So I think Rebecca and Omari definitely the points. It all depends. Certainty of close is what's important. That is the key, right? Omari said that. And to your point, Omari, sometimes it isn't the biggest number. Is if the person can actually have the resources to close on whatever they're offering me, right? So I think, showing as much strength, like you said, that personal financial statement, having that team together. How do you present? I would even think about presenting a plan, a playbook to the buyer. Okay, if this happens, this is what we plan to do with it, right? I think stronger you show who you are and know what you're doing, the better your offer will be received from the potential sellers.
I do want to add to this, and I get this question a lot, and that a lot of people are having issues with their LOI getting approved, and I think some of you all kind of touched on it a little bit, but if you all could give some advice on what can help strengthen buyers, especially in new buyers, LOI to actually get accepted. So
I can touch on that real quick. A few things. Some people come in with way too aggressive timelines. They want 120 days due diligence and a 78-day close, right? Just something egregious. The other thing is that they're not putting up any non-refundable money. And then they have so if you don't have up any non-refundable money and you have a long due diligence time frame, the seller's not stupid. They know that you're trying to raise funds. And if you're trying to raise funds and you can't raise funds, you're going to blow out and not close. So that's why showing proof of funds with your letter of intent, and I've had a lot of buyers, they go as far as to show the proof of funds that shows the equity, and then they go out and get like a pre-approval letter from the bank that says, hey, we've pre-approved this deal for such and such person. Now they're showing you debt and equity. So they saying, look, financing is likely not going to be an issue. Those things I've seen really help LOIs get accepted. But the other thing is too, like, it depends on the seller. If the seller is, just kind of a less sophisticated individual or group of partners, it doesn't have to be a very robust LOI. None of them really have to be. They just want to know what your due diligence time frame is. They want to know what your closing time frame is, price, and contingencies. That's all they really need to know. Some people are going out here downloading LOIs just for general commercial real estate, and it has language in there like, we want to see vacancy and rent rolls. And it's just like, I already know that you don't know this game. And, I'm not saying that disqualifies you, but it's not the best look.
I just mentioned how you don't want to insult the seller with your offer price. So that's one thing to really consider. What's the list price and what you're offering? And everything that Omari just said. I don't really have much to add to that. Chris, you have anything?
Yeah. Well, first off, no flex like Omari said, but your offer would be much better received if it's from Omari, Rebecca, or myself, number one, because we have, who makes the offer is as important in what the offer is, right? Because again, if you're using an experienced broker to present that offer, that carries a lot of weight, because then that that seller at that point has already checked the box and said, this is a qualified buyer, because we've done our job to make sure that we only represent qualified buyers. So I think who presents the information is sometimes as important as what you put in the LOI.
No, I like that. I like that. Um, do you I have a question for you all? What what advice, I guess, would you all have for actually my little one took my phone while I was reading the question, so I was trying to memorize the question, but that's probably not gonna happen. So I'm just gonna open it up for the audience. Do you all have any questions for the panelists?
Hello.
Hi, I do. Oh, go ahead.
Go ahead. No worries. Go ahead, Nicole.
Hi, yes, this is Nicole. So I have my business partner is Andre Slaughter. We are very new to the game. We decided in going in together and buying a hotel about 10 months ago. And within these 10 months, we've been just getting our foot wet, doing the seminars, learning what we need to do, raising our funds and things like that. Between the two of us, we both have equity in our homes. We both have a business that we could acquire financing from. For instance, so my question is on the business side, let's say for an LLC. So I have a business that's called Housing Homes. I've been into real estate for over 20 years, but it's not commercial real estate. It's just residential real estate. And that's what Housing Homes actually is. So I'm I'm pretty much told I can raise a significant amount of funds through Housing Homes. Again, I'm new to this, and when I say residential, I know there's a thing called debt to income ratio and things like that. How could debt to income ratio affect me, or will it affect us in regards to taking loans out against the LLC and using that to purchase a hotel?
I'll take a quick stab at that. So I would say the first thing is, in addition to the LLC, like they'll probably be looking at the financials of you and your partner, business partner, and a big piece of that is the lenders are looking at something called global cash flow. And the piece about that global cash flow is they want to see kind of where your money comes from. So, and it kind of helps that you have one or more or two or more partners, and especially if they're not in the hotel business. Some people get anxiety, like, oh, I don't want to show, it's four of us on whatever. It's just like, no, that helps because they want to know that if something goes left, you're not fully invested in the hotel business. If you're a full-time dentist or principal or whatever, they know that you have, another stable source of income. You got a job, you're not fully relying on this. That's one piece of it. So in the hotels, the focus is more so on debt service coverage ratio. And what that means is they're looking at how much that after the mortgage, how much is left over. So they usually want to see at a 1.0 mean that you're breaking even. So they usually want to see 1.25, 1.3 in terms of debt service coverage ratio. How do you get to that number? That's where you have to hire somebody on the consultancy side to help you underwrite and assign a value to that deal to make sure that before you even bug that banker, that it'll get their attention. That'll be probably the first two quick things. I'll hand it over to Rebecca.
I think you did a great job. I don't have anything to add to that. Chris?
No, as usual, the hip hop broker, man. He's covered it all, man. He was very right as far as having an understanding of the debt to income ratio and the difference, the debt coverage ratio, right? At 1.2. I think those are very important things to understand what the debt service coverage ratio is and how that will affect the hotel. Because again, they're looking at you to potentially guarantee this thing, but at the end of the day, the asset has to pay for itself. That's what's most important.
Yeah. I do want to add another reason why we keep saying, when I say we, Omari, not we, do a lot of courses and stuff. We always talk about hotels less than 5 million. And it's a reason why we say that. I know some people, they want to try to go, to get more, but you talked about, getting access to capital and also qualifying for that loan. You have to be able to guarantee the loan, right? And so if you're trying to get a hotel that's like $10, $20 million, and you really can only afford to guarantee even with partners, then that's what you need to look at. So when they talked about in the beginning with the price point, you need to really understand your price point, and that's what Omari was talking about before, about doing your personal financial statement to see exactly, okay, how much can you afford? And the biggest thing is for the proof of funds and raising capital, how much money do you physically and actually have access to? If you need to raise $1 million or if you can, it's easy for you to raise $500,000 in 90 days than it is $1 million. And those are the deals that you need to be looking at. So we got another question that says, what are the nuances from the financing perspective on an operating versus a property that's been closed a while?
Read the last part, Devon, again for me. The nuance between what?
It says, what are the nuances from a financing perspective on from an open hotel versus a hotel that's been closed?
Well, I mean, I think it's a lot easier to get financing on a hotel that's operating and improving income. I think it's a lot harder to get, not impossible, but I think it's a lot harder to finance a hotel that's currently closed, and you're a new guy, because again, you're new. That's a risk in itself. The hotel is closed for a reason, so that's just more risk. And so, could it happen? Possibly, but I think that the newer folks should focus on something that's already open and operating.
The other thing is too, is that, folks like Rebecca, Chris, myself, we all have capital markets relationships where we can help you get that deal financed. Even if it is that ugly deal, where it has been closed. There's a debt option out there. You may not like it, but we know the people to call that are in that situation. You're going to be looking for somebody called a pro forma based lender, right? Because they're going to have to look at, like, okay, this is just sticks and bricks. They're going to get it up and running. This is what it's going to eventually look like. We buy into this person's vision, dream, and the forecasted numbers. The economics make sense in the future. But like Chris said, he said it best. Proven income. That's always an easier conversation.
Yeah, because the red flags are, why did it close? There's gonna be too many questions. Why did it close? Why is it still closed? Can you reopen it? We don't have faith in you. Like Chris said, it is gonna be too many red flags and too much stress. I don't know. I jumped in, Rebecca. I don't know if you wanted to say something.
No, those guys covered it. That's good. Go ahead.
I think Amina had a question. Amina, Sam.
Yes, thank you so much for hosting this. I was wondering if any of the panelists have exposure with hotels internationally, and if so, some tips they would have for someone who wants to either develop or acquire a hotel in Senegal. Thank you.
Nobody jumping in?
Chris, Devon, this is Angel Devon. Hey, Omari and Rebecca.
Hey.
I'm doing Chris. I haven't met you yet via the phone, but hopefully I will someday.
Yes, sir.
I only could speak to experience, and I think Devon would know the best, that during my days at Hyatt, I used to handle all of the Caribbean and Latin. And it's a totally different ballgame when it comes to everything outside the US. And the complication and headaches are pretty much 10x to trying to close a transaction here in the US. So that's kind of, in simple terms, the best I could say. In dealing with feasibility, market research, and underwriting when I used to work for the brands a few years ago.
Yeah. I would thanks for jumping in on that, Angel. I would say, Amina, the reason why I'm not a fan of international deals is because, to Angel's point, it's very complicated. And the biggest thing is you really have to know someone in that particular market. And a lot of times with international countries, you have to be a resident in order to own the land. And so when you do international deals, you have to really build a relationship with the municipalities, because their financing is different and every municipality is different. So you're talking about, Angel was talking about Caribbean and Latin America. You talking about Africa, which is a whole different ball game, right? And so it's like, okay, the biggest thing is land, right? So securing the land, then, financing the land, then the biggest thing is if you're over here, how are you going to manage it? Who's going to manage it? Right? That's the biggest thing, is who's going to manage the property for you to make sure that it's supposed to operate the way it's supposed to be operating, right? So those are kind of the big things that you want. And then the biggest thing is, do you have anybody in Senegal, whichever part of Senegal? I don't know if you got family there, if you're from there, if you know somebody there. Like, you need to know somebody that is literally on the ground that really understands that market, or with whoever wants to do international, because it's a different ball game and they just do things completely different. So that would be my recommendation to you. I mean, it's to find somebody who is in that particular market who you can trust to work with. Because I would hate for you to work with somebody internationally and they just take all your money and you don't have any land, which can
I
happen
would
in the
say,
States.
I was just going to jump in real quick and say,
Yeah.
I think that actually all those things that we just shared, that you could solve for that if you work through it. The biggest challenge, from what I understand about through, and this was more so specifically to South Africa, and some, I've heard this issue in some other countries from some folks that have actually, dealt with brands and or development over there, is the financing is very, very different. It's so I would say, because that's something that you can't solve for. If you find out that it's 50% LTV there, that's a very different conversation, and understand how those things balloon or bullet.
Yeah.
And so start looking into what that means, the actual economics of the deal, because everything that we've shared with you, like you said, so you can have family members that are in the government and some other things, and some good relationships there. But I think the lending piece is where that's going to fall apart. And so that's why, you heard these US brokers get quiet, because quite frankly, there's just so much territory here across 50 states that we can transact on, that it's rare that we step outside. And not that we're not open to it. And we've all been presented with opportunities, I'm sure. But we want to be mindful and respectful of our clients and customers, to say that we don't have the experience there, and we're not the best to advise you.
I got quiet because I had an opportunity to invest internationally as a limited partner. And what we've learned is it's helpful if you know someone in the government there, because just knowing folks there is very different. And it will be helpful if one of your business partner was a native, because the rates are very different for natives versus, international folks. We had a situation where the earnest money deposit just disappeared. It was just gone. So they found another opportunity, but at this point, the sponsor of the deal had a relationship with the government, the governor, the mayor or whatever of the island at that point. And now things are going a little better. So you want to have some deep roots there and a partner that's from there. Yeah, it's tricky. It's definitely different than the States.
I appreciate all those insights. For the record, I do own land there, and I do have family in the government. And I plan on moving there. I was born and raised in Brooklyn, New York, but my family's from Senegal. I'm only living here now to like bootstrap, make some more money, because like you said, the financing. I do have several bank accounts there, so I have some leverage to get maybe like 40% LTV. Definitely not 50. But it's a start. And yeah.
Oh, I feel a lot better about your question now.
Yeah. I was a little worried. Yeah, I want you to land with that one.
No, I felt it in my spirit that she had some of those things solved for. And that's why I was just like, my biggest concern was the lending. No, but great question, because we get that a lot in terms of international. We always refer them to other folks, but I felt that because it was such a specific location that all those other things are likely solved for.
Yeah. I was hoping. I was like, well, I hope so. Yeah, but just always have to put it out. Yeah, because I've even seen in some countries where it's like 100% equity. Like, they don't even do financing. So, so I don't know if that's the case in Senegal, but I guess you just mentioned the 40%, LTV. So I know some.
And you're doing another international tour, Davon.
We're going to Belize next year. We're not going to, we with the Turks and Caicos last year. So next year we are going to Belize. We have someone who I know, they own the land, and it's an investment opportunity. So we're doing a trip to Belize for those who want to invest internationally. I'm not a part of the deal. Y'all know I don't do international stuff, but yeah, I don't do that.
But it's interesting.
He already owns the land though. He already owns the land. He already did the legwork. we're just putting a trip together because I know some folks who like to invest internationally and who want to go to Belize. So, and people keep asking me, when am I going to do my trip again since we went to Turks? So,
and I was just going to say one thing that I learned on the Turks trip was if you look at how the hotels are developed there, a lot of those, the larger hotels, and by larger that are branded, they're getting developed in conjunction with residences. And that's how they're financing the hotel because the debt is not widely available like it is here in the US. So they got to sell these condos at, 500,000 millions of dollars, and they're taking a piece of that to fund the hotel development. So like in Turks, it's the Ritz-Carlton and residences. The St. Regis is going to come on, is going to have residences component. That's the only way that they're getting stuff financed. And then it's only like X amount of banks. I know it's like RBC and maybe one or two other ones. I think it was almost really just RBC, but they were.
Remember somebody started their own bank, remember? Remember he had his own. Yeah, he pretty much started his own bank,
Yeah,
it was through private funds.
Having an understanding of what those debt markets look like, but I'll shut up. I see Angel has his hand up.
Angel, you ready?
Yes, I'm sorry. I had just a quick question for anyone here today. The word preferred equity seems to be running around lately, at least in the hotel world, which is the world that I know for quite a while. So I just wanted to get your thoughts around how you either analyze or approach the rate that the sponsor, right, has in mind versus what the ultimate investor wants, right? There seems to be, I don't know if the word is a big spread or a big gap between what I want to offer as a preferred versus what Omari might want as a preferred, right? And as a broker, how do you approach those type of situations, especially now in this environment where most likely you need it?
I'll just jump in real quick. If you're talking about pref equity specifically, that gets into like the operating agreement and more so in your capital stack. And for the most part, the brokers don't really have their hand in that because that's between the GPs, LPs, and how you all want to structure that. Are you doing a waterfall, pari passu, all of those type of things? When you're looking to really help with the aggregate, that's more so with the sponsorship, and that's less on the global kind of transaction field, if that makes sense. And I could be speaking out of turn. I don't want to speak on behalf of Rebecca and Chris, but I'll let them chime in.
Thanks, Omari. As a broker, that's not something that I really get involved in, but as a limited partner in a deal, that's when I look to see what the preferred return is, because I definitely want that as an investor. And so those are two different buckets for me. We don't really have those conversations as a broker, but if you have a deal that I'm considering investing in, I definitely want to see if there's an 8% return, preferred return or something like that.
Yeah, and just echoing what Rebecca and Omari said, absolutely. I mean, for us, we also have to be careful on what we give advice on because we open ourselves up for liability, right, being a broker. So I stay away from those conversations, to be honest with you. I say, go get the best deal you can, my man. And,
well said, OG. We don't operate outside our scope.
Right.
Sounds good. Thank you.
King Jeremiah.
Yes, hi. I just want to touch on Amina's question about international operations. And so I'm working with a company at a worldwide hospitality network that we can help facilitate, find buyers and sellers for international hotels. And also we have a few different investors who are looking for special types of deals internationally, but they're more like green deals. So if someone is doing a hotel project that has various elements of green initiatives, like energy saving, water saving, and so on, then there are funds within the US who are willing to make those kinds of investments. So, it all depends on the type of deal that you're trying to do in Senegal or anywhere else. But, my folks at the Worldwide Hospitality Network can assist with that.
Wow, that's amazing. I am an environmentalist. We do have all those, so I will be messaging you right now. Thanks.
Yeah.
Oh,
Okay,
I
Can you put
love
the
awesome.
name of
Thank
that?
you.
Can you put the name of that company in the chat, King, so I can jot that down?
Yeah, sure. Okay.
Thank you.
I love it. I love it. I love it. Well, this has been great. We're at 8 o'clock. I thank you all so much. I thank you to our panelists. This has actually been great. This is what we need. We probably have to do this again. Hopefully this was helpful to everyone who's looking to buy a hotel within the next couple of years. So please share to everyone how they can stay connected. When I send the replay, I'll put their contact information. But Rebecca, please let everybody know how they can find you.
I put my information in the chat, my email address, my cell phone number. Feel free to just send me a text and we can schedule a time to talk.
I love it. Okay. And Chris, what about you? How can folks connect with you?
I'm gonna try to figure out how to put it in the chat, and then
That's okay. I'll put it in the email. That's okay.
yeah,
I'll put it in the email. What's the
I'm,
best
I'm
way?
I'm definitely
It's
showing
okay.
my
I got
age,
you.
right?
It's okay.
But
I got you. I got you.
appreciate you. And so easiest way is honestly email cross@ladderbloom.com, CROSS@ladderbloom.com, or the cell phone 504-352-1492. 504-352-1492. And again, thanks a lot. I really appreciate everybody's time. Rebecca, I learned a lot. Omari, always my man, always. And Devon, you continue to be the force that you are in this business, man,
Oh, thank you.
and keep grinding. Thank you.
Thank you. I appreciate it. Hip Hop Hotel Broker. How can folks find you?
Y'all know what it is. Tap in with me on Instagram at Hip Hop Hotel Broker, YouTube at Lodging Education. Tons of content on there. I shared all of that in there. My email is ohead at Paramount Lodging Advisors. I'm sorry, ohead at ParamountLodging.com. I typed it in the chat correctly though, I promise. Feel free to reach out, stay in touch. What you should definitely do is when you send all three of us an email, ask to be placed on our distribution list. That way you just get to see all the deals that are coming out. That's going to be the most important next step, is for you to start investing in yourself and start consuming the deals, and start consuming the information. Like Chris said, just don't hop on the phone and be like, tell me what this is. Like, this is not residential real estate. Nobody got time to go to Olive Garden 17 times and chop it up. Like, we're trying to help move you through the process in an effective, efficient way, and that guarantees your success. So take your time, read through all the due diligence materials on a few things, just jot down your list of 10 questions, and some of that stuff you might want to send over in an email, because there's going to be verbiage that you don't understand and all that type of stuff, but just start absorbing it right now and soaking up the game. You got to dive in.
This is great. Well, thank you all so much. Everyone will get a copy of the replay. Thank you again to Rebecca, Omari, Chris. I appreciate you all so much. This has been great. I learned a lot. I always learn something from y'all. So can't wait. Tomorrow we're having a webinar with Tommy Bayer. He's going to walk us through on how to analyze the deal. So some more information. And then Wednesday night, we're going to have something with Duke Ventures, where they have an opportunity to share. That's an opportunity to share a limited partnership. So thank you all so much. You all have a wonderful night and enjoy the rest of your Monday evening. And thank you all so much. You all have a great one.
Thank you.
Bye-bye.
Thank you.